Hi, all. Happy Friday to you. It's a kind of happy day for the market. It should be for the Nasdaq Composite. And so far, so good. Not great, surprisingly enough. We'll get into that as we will get into Apple's earnings, Amazon's, Google's, and Facebook's. But given the actual numbers, the net profits, the actual revenues being what they were for those companies, you would have thought, I would have thought at least, that the NASDAQ Composite, NASDAQ 100 would have made new record highs. So quite surprising there. The Dow and the S&P lagging. S&P just below the flat line as we speak. And the Dow Jones, having been down about 1%, is now down 0.5%, and sort of flatlining around here. But it's a bit of a surprise, to say the least, with earnings being as tremendous as they were. Revenues especially robust, that the NASDAQ Composite and the NASDAQ 100 both of them haven't made new all-time highs. So we're going to take a look at those graphically, but for the life of me, I'm perplexed. This sort of speaks to what we've been talking about all week, what I've written about and what we've talked about here. There's something going on with the leadership benchmarks, with the NASDAQ 100 and the NASDAQ Composite. They should be performing better. This started again a couple Mondays ago when NASDAQ Composite and the NASDAQ 100 made new all-time highs, 2% above where they had closed the previous Friday, and just looked absolutely stellar, only to end up that same Monday down 2%. Now that's stunning, and that certainly was a shot across the bow for anybody who was watching, that something is wrong. And they have moved sort of sideways. Both of the benchmarks, the Composite and the NASDAQ 100, moved sideways to a little bit downward draft kind of issues here and there a couple of the days over the last 2 weeks. And that now includes the reaction today to just beyond stellar numbers, which everyone expected would be good. I don't think there's any surprises in the numbers, and I'll break down them briefly in terms of the most important headline numbers for each of those companies. And nothing surprised me, really. What surprised me was the reaction to them. Just the way the market has been reacting has been odd, and the way it's reacting today is odd. How we end up today is going to be important, because if we don't end up higher on the day, especially for the NASDAQ Composite, if it gives up its gains today, then something remains wrong. And I don't know what it is. Is it investor fatigue? Has retail sort of abandoned the momentum trading that they have helped bring the market higher with? Is there something going on? Is there institutional fatigue? Is it that we're just starting into August and everyone's taking it easy for the last month of the summer before things get really crazy? I don't know. A lot of that going on, and also a lot of thin volume, which happens in the summer, needless to say. So again, I'm a little perplexed, and it still bears warning that we haven't done what we should have been able to do easily, which is make a new high in the NASDAQ 100 and also in the Composite. And the fact that we haven't done that keeps me a little bit concerned, and perhaps more than a little concerned. I really am not sure why we haven't blown past previous highs. That's what should happen. It still could happen by the end of today. There's no momentum right now, but that can change if investors want to pile in at the end of the day, thinking that come Monday, everyone will come to their senses and recognize what stellar earnings these companies had, and how the NASDAQ Composite and the NASDAQ 100 are still the leadership benchmarks, and how tech is king, and on and on and on. But that's not happening. And maybe it won't happen because in spite of their monumental earnings, perhaps that is a bit in your face in terms of the congressional hearing on Thursday. So real problems for some of these companies. We got the hearing issue, and the stocks reacted really well the day of the hearing. The questions were really tough. There was no quarter for any of the CEOs, and the stocks all did well that day. And earnings, of course, yesterday just, the market was fairly flat, not a lot going on up until earnings, and then all the stocks in the aftermarket, except for Google, kind of meandered a little bit. They just were up 4, 5, 6+%, pretty much after earnings came out after hours. So we're going to take a look at each of those, and we're going to take a look at where we are in general and talk about some of the stocks that you guys want to talk about. So send me any of your questions, and let's just get into some of the hard numbers. I'm not going to get into depth on all of these numbers. I'm just going to give you the headline numbers, the ones that are really most important, because they tell the story without going into detail. There's plenty of details, lots of breaking down of the revenue streams and where they came from for each of these companies, which is very telling on a lot of levels, but I don't think it's that important right now. Right now, we want to talk about the big picture because that's what we're looking at. Amazon, no surprise. Everybody knew that the lockdown was going to just generate a ton of business as people were locked down, and the only way you could get things for a lot of people for a long time was to order them on Amazon. So needless to say, nothing unexpected there. The revenues were a record at $88.91 billion for the quarter. The consensus estimate for revenue for the quarter was $81.56 billion. So a handy beat at $88.91 billion, just absolute handy beat. Profits doubled in the quarter. And when I'm talking about each of these quarters and all these metrics, these are year over year. So their profits doubled to $5.2 billion relative to the second quarter of 2019. So doubling of the profits. Earnings per share. The estimate for the earnings per share number by the street, as defined by Refinitiv, which is one of the go-to sources these days, and Refinitiv was a combination of Thomson Reuters, and they were bought by a private equity company and merged, and anyway, they go by the name Refinitiv now. So that's where this data comes from. Estimates based on Refinitiv's numbers, consensus was for $1.46 per share EPS for Amazon. $1.46. Earnings per share, $10.30. Just, you can't even call that a blowout. I don't know what you call that. So unbelievable. The stock is up very handsomely, as it should be. And even better for Amazon, they guided for Q3. They guided with an expectation of earnings being up maybe 24 to 33% in Q3. So very positive outlook from Amazon. The stock is reflecting that. Apple sales up 11% in the quarter. Revenue came in at $59.69 billion. Estimate for the revenue was $52.25. So a record for this quarter, for the second quarter for Apple in terms of revenue. Just absolutely outstanding. Consensus estimate for EPS, $2.04. Actual earnings per share, $2.58. Just horrendously undervalued in terms of what, I don't know what these analysts are thinking, because Apple had been guiding in public comments that their revenues were looking good, and people were expecting good maybe was better than knockdown numbers, but good meant actually better than ever. So that's what they were saying. And sometimes these analysts just miss the nuances of sometimes what's coming out of these companies. I think they missed it this time. So a record sales up 11% for the second quarter. Also 4-for-1 stock split. And every time Apple has had a couple of stock splits, stock continues higher for some time after that. So another very positive sign that they did a 4-for-1 stock split. Double-digit growth in products and services, which is terrific. People want to see that. Why? Because they want to see recurring revenue, and that's the name of the game, recurring revenue. So the iPhone sales were also excellent, better than expected. I think that's the only reason I'm going to break this down, because people look at iPhone sales and they say they've got to be losing market share. There are only so many phones that people are going to buy, and the refresh cycle, how is that going to impact on and on? So iPhone sales, well, the iPhone revenues, of the total revenues of 59.69, iPhone revenues, $26.42 billion. The estimates for the iPhone sales were 22.37 billion. So an astonishing beat there in iPhone sales. So Apple just hitting it out of the park. It's going to hit its refresh cycle on the iPhones come September. They're going to be a little late in introduction of the new phone. They said, I think 3 weeks maybe. Sometimes that can get extended. But it just means more revenue coming. And if this refresh cycle is as exciting as people expect it to be, then I think the numbers are going to be terrific for Apple going into the third quarter. Also, as far as Apple goes, their iMac sales, the tablet sales, all of their sales, the wearables, everything, just out of the park. So tremendous across the board revenues, sales, and profits at Apple, all divisions, hitting it out of the park. Facebook sales also up 11% at Facebook to $18.7 billion for the quarter. That was good growth, but it was the slowest revenue growth for Facebook since its IPO in 2012. So yes, it's growing, but it's the slowest growth in a quarter over quarter. So 2019, 2020. So still great numbers considering. Now the boycott of Facebook didn't happen until later in the quarter, and some of that has already subsided. So I don't think there was really much reflection of those boycotts by advertisers on Facebook that really impacted the earnings much, if at all. But we may see some impact on that in Q3. However, Facebook also guided positively moving forward. So again, terrific numbers. Some of the cool numbers, which are, when it comes to active users, daily active users, monthly active users, total active users, those are metrics that are really important to Facebook. So I'll give you some of those. The daily average user, 1.79 billion daily active users. The estimate was for 1.7, so nice hit there. Monthly active users, 2.7 billion people, versus estimate of 2.6. Facebook claims now that its family of apps in total has 3.14 billion monthly users. Not necessarily active, of course, because the monthly active users are 2.7, but 3.14 billion monthly users. Wow. No wonder they're making so much money. And Facebook, in terms of products and other things they can do and will do, with that kind of audience, with that kind of base, it's going to continue to grow. It's going to continue to just rake in profits, and going to continue to go higher as far as the stock goes. That being said, revenue, 18.7 billion for the quarter versus an estimate of 17.4 billion. Earnings per share, analysts were looking for $1.39. Earnings came in at $1.80. So just great numbers for Facebook, Apple, and Amazon. Google, not so much. Google saw the first revenue decline, I think, in its history. So can you imagine? Revenue every quarter over quarter for Google has gone high. This was the first revenue decline it's experienced since it went public. So that's really something. And that's year-over-year revenue growth. So the revenue came in at 31.6 billion. The estimate was for 30.5 billion. Earnings per share, again, hit it out of the park. The estimate was $8.27. They came in $10.13. The net profit, $6.96 billion. Cloud business increased 43%. Core search and ad revenue was down 9%. YouTube revenue was down also double digits. So what we knew was going to happen with Google out of the big four reporting yesterday was that Google was going to experience the greatest impact on less ad spending. And indeed, that's what happened. Still, nonetheless, beat estimates, beat them handily across all metrics, and then just hitting out of the park. So all four of them hitting it out of the park. And what's the Nasdaq doing now? It's fallen from up over one point, maybe 2%. I think it got to. It's down. It's only up now. It's less than 0.5%. So we're going to take a look at these stocks and see what's going on with them. They're not the ones that are slipping, or are they? We're going to find out. Got a couple of questions, and then we're going to take a look at a bunch of metrics. Sergio, why do you think Microsoft is one big tech stock lagging? Still never recovered from last week's disappointing earnings. Because I think, Sergio, all of the focus is on the stocks that were going to go up against the House subcommittee, and their earnings then coming out yesterday. So you had that hearing on Wednesday, then you had the earnings yesterday, and all eyes were on those big four. I think that's just the lack of interest in Microsoft was because the focus was elsewhere. Pretty simple. But Microsoft is also part of this pause in chasing the tech stocks higher. Maybe it's because they've all run too far too fast. Maybe it's just because retail is taking a breath. Maybe because we're coming to the end today of the extra $600 a week for a lot of families on unemployment. A lot of that money, we know, was going into the stock market. The savings rate, the thing that blew my mind today was the savings rate for June went to 25+% from 9% the month before. I mean, the numbers are staggering. So a couple of economic numbers. Consumer spending for June up 5.6%. Okay, that's good, not great, because it tailed off towards the end of June, according to the actual breakdown of the numbers. And supposedly retail sales have pulled back since then. So July numbers aren't certainly going to be as robust. That's the expectation because a lot of things were closed, things were being shut down, et cetera, et cetera. But also because people may not have been spending as much, knowing that there isn't another stimulus package at the ready to fire. And what's going to happen? When's one going to come? And what's going to be in it? Nobody knows yet. And if you're looking at your unemployment benefits being reduced from, say, there was one metric I saw, one story in one of the papers I read today. This person was in Arizona, and $246 a week is what they get, plus $600. Now, as of today, that's done. They're just down to $246. That's a huge difference per week. Okay, huge difference. A lot of that money was going into the stock market. People were home, weren't out, try and make some money. A lot of them were successful. And so perhaps part of what we're seeing is a slowdown in the chasing of these tech stocks. Personal savings for, not for June, for second quarter. Personal savings, 25.7%. I've never seen a number anywhere near that. So how is that possible? Why are people not spending? So that's one of the reasons that the analysts are looking at the June consumer spending of 5.6 and saying that's not sustainable through July. And July is going to have a big fall off because the savings rate leapt up in the second quarter. And towards the end of the second quarter, that's when it really started to kick in. So savings rate in the first quarter, personal savings, 9.5% in Q1, up to 25.7% personal savings rate in Q2. This is staggering. So people are holding back and not chasing the market. So I think this is part of what we're seeing in terms of lack of momentum. And maybe that's what we've seen all along in some of these high-flying stocks, that lack of momentum is the retail crowd receding in their aggressive buying and chasing stocks higher. So remains to be seen, but that's probably a pretty good thesis in terms of where retail's at right now. That's also what I think is happening with Microsoft, Sergio. Ruby, best cybersecurity stock or ETF now? Oh, there's a couple of that. I'm going to come back to you on that there because I go back and forth, Ruby, between a few of them. So let me put that down, and I'm going to revisit the ones I like, and I'll get back to you on Tuesday. Because that's a great question, and I'll go over not all of them. I'll go over several of the names that I'm looking at, and I'll show you why it's difficult to pick one, and maybe we need to pick a few of them. But they've done well, but there's no gem in there that just stands out that hasn't already had a really good move. So we'll take a look and see where there's an opportunity to get in. Hi, Julian. Glad you're hearing me loud and clear. Hope you're doing well. Peter is SRNE with 30 minimum COVID tests, up another 14% today. Wow, great. Wow, you made some. You say you own some calls there. Good for you. Let's take a look at everybody RNE. We're looking at SRNE. Wow, what just a stellar couple of days. Today, just up 14%. Fabulous. So I'm looking at this is going back to May. Sorrento Therapeutics stock is a buy on the 50% chance of a COVID-19 antidote. Analyst said that goes back a ways. So the stock obviously has been in play for some time, and hang on to it because it certainly looks like a winner. Well, it is a winner already. Let's just hope that it comes to pass. Sound like you got yourself set up nicely with a bunch of calls there. Good for you, Peter. Hit it out of the park, pal. Tommy, how will Apple split affect the Dow? It won't. It's the same value. It's just divided between more shares. That's all. It won't affect the Dow. So because those adjustments are made automatically, so it's not. It doesn't matter. It's the total capitalization that's going to impact the Dow. The number of shares doesn't. All right. So let's have a quick look, and then I'll come back to see if you guys have any additional questions. Let me give another quick look, see if there is anything else from you guys. I don't see anything. So let's go to some charts real quick and take a look at, I'm going to take a look at, first of all, the Nasdaq Composite. Why? Because it's only up 0.25% now. So here's the Nasdaq Composite. I put in a couple of little arrows and some support levels here that I think are very interesting and necessary to watch. So obviously, here's our 200-day. You know that here's our 50-day. We know we had this golden cross way back when, and you can see when we had that golden cross. If we look at approximately when that was, we can go up to the bar right above it, and we're up here somewhere. Right around here, you can see that. And what did the stock do? The composite do? It just soared, took a breather, up, up. Now, here we are. Okay, this kind of call that a double top, maybe. We got the sell-off. This is the crazy sell-off Monday. when we make a new high and then collapse, and then we have trouble trying to get back up there and can't hold that, and struggling a little bit, but and here's today. This bar is today's bar. Okay, so here, if you look over to the left on this screen, you will see the open, high, low, close for that bar. So we open at 10,741. Okay, the high of the day, 10,746. So we opened up nice and high. We get a couple points higher, and that's it. The move is pretty much done. From there, we're kind of drifting. Right now, we're at 10,618. Okay, so we are above the lows, but we are not really in a good position. You just don't expect this. It doesn't mean that we're not going to see further rallying into the close, and investors maybe come to their senses and say, "Holy mackerel, that's pretty good. The numbers were great." But this is what I've said, maintained all week. Something's wrong. The opposite could happen, and this is what I worried about all week. Because of the way the market has reacted, especially the Nasdaq Composite, especially tech stocks, and all of them have a similar pattern to what we're looking at in the composite. And some of them, we'll look at each of them real quickly. Certainly not even as good looking as this, more towards the downside here. We'll take a look at that, except for obviously the big earners yesterday. It just doesn't make sense that we haven't seen more momentum. If we don't see buying starting at 2, 3 o'clock into the close, we could actually see selling, which would be extraordinarily odd given the news this week, given the fact that the earnings are what everyone expected and then some, and there's no follow through. That could be the beginning of maybe the doldrums through August, could be the beginning of a whole lot of nothing happening, could be the beginning of some sideways consolidation and a trading range, and or it could be the beginning of the end of the rally. Yeah, we're at that kind of point, and that's why this has been an important week, and I have been pointing to that all week. So there's the composite. Certainly would love to see this close on the highs of the day to be reassured that we're pretty much in good shape. The lows of the day are turning negative on the day, and the big cap stocks with all their earnings out yesterday turning down, giving up a bunch of their gains, not a good sign. So let's take a look at them. We're going to start off with Facebook. Because Facebook just looks crazy. So look at Facebook today. Just an absolutely just crazy move. Now, you would think that the stock it's up 8.25%. It's got to hold up here. I know there's a gap there, and I know at some point, we talk about filling gaps. But given the strength of Facebook, given the fact that they had some very positive forward guidance, if this stock breaks down, that's worrisome. That's really worrisome. And I'll come back to the composite because there were some support lines I want to show you, but I want to first go through some of the major big mega cap techies. So there you go. Holy mackerel. Just an absolutely stellar move, well-deserved, sustainable, should be. Should take a while to fill that given the numbers and the strength of Facebook's earnings power. So there you go. That turns around today, problem. And that one concerns me the most. Amazon. We know Amazon is a juggernaut, and I don't think there's any surprise there. So we have a really robust move, obviously, today in Amazon, not unexpected, a little bit of a gap there. But you see Amazon, it's not gapped up through everything. It's still, in this little pattern area here. But again, want to see Amazon stay up there. Right now, it's up about 4%. Want to see it was up almost 7% overnight. So we want to see it pretty much hold up here. We don't want to see it fill this gap by the end of the day at all. We don't want to see it close on the lows of the day either. We want to see it close, certainly the higher the better, but pretty exciting stuff there. However, if this comes down the next couple of weeks, we got this important little area right here, and we're going to be watching that. But Amazon just killer. Apple, of course, killer. And by the way, a lot of these stocks have all been upgraded at lots of brokerages, and some of the numbers have gone through the roof in terms of some of the price targets that analysts are putting out for some of these companies. Now, here we go. Apple just again, here we are. We had this beautiful uptrend, and this is, again, there's that crazy Monday, and then all of a sudden we're down through the uptrend, and certainly wanted to get back above there. But this is spectacular fashion. It just gets back up there in spectacular fashion. Love it up there. Needs to stay up there. Interestingly, if we just take a little bit, we extend this trend line. I'm going to try and get on there and see if we can extend it a little bit. If we extend that and continue that trend line, interestingly, we're above it. So if we can keep above there for some time. It may take some time for Apple to fill that gap, but we don't want it to see it. If it fills it anytime soon to the downside, problems. So this is how important it is for these stocks, these winners, to stay up where they are. Google didn't have as good a day. Overnight, it was pretty flat. It tried to get higher, but really couldn't. Everyone's looking at ad spending and the fact that the first decline in revenue growth, I should say. Obviously, that's a headline worth digesting. And here we go. So we kept some of our markers up from the other day, and stock now obviously suffering down 4.25+%. And just again, we had this little uptrend here. We kind of paralleled this. We had this consolidation in here. We had a little bit of support here. We came back down. We were kind of okay along that support as long as we stayed above it. Now we're through it. Now we're also through at the low mark of today, which right now we're at. Let's see where we're at right now. We're at 1467 on this chart right now, and the moving average is. We're at 1,467. The 50-day is 1,465. Okay, so we are actually just above the 50-day moving average where we are trading right now. The low of the day was 1,456. Moving average, 1,465. So intraday, we were through the 50-day moving average. Now, that's not an automatic sell signal. It does give cause for concern. So not so good. Again, I didn't expect the stock to get hit that hard, but here we are. Now we're through this former support is now something of resistance, and we're kind of looking at resistance now about 1488 thereabouts. So we're at 1466. We got resistance at 1488. I don't think that this stock can get above there by the close. We're going to have to see a tremendous rally, but that's not happening. Right now, the Dow's down 230 points, 0.87%, and the Nasdaq is approaching flatline. So Nasdaq Composite is only up 12, 11, 10, 9. 9.85 points right now, 0.09. So let's go back and take a look at what those supports are. Now, I'm not fretting. I'm not worried that we're going to see a collapse in the market. There's too much strength out there, and there's certainly the buy the dip crowd is probably at some point going to trigger some buying. That's what we have seen in the past. The question now is, where is that going to come from? Yeah, I don't think it's going to come from retail now. So maybe we won't get the kind of support that we have had in the past. So here is the Nasdaq Composite. We got support right here at, call it 10,000. Call it 10. I'm going to give it a range, about 10,000. Call it about 10,185. Okay, so maybe you want to jot that down and just remember, we get to that level thereabouts. We're going to start to watch this very closely, because if we get there, we are now outside of this very nice uptrending channel. We'd be out here, okay? We'd be out here. So again, here's the channel. All right, and I'll draw it a little further. It'll be something like that. Now, if we in the next couple of days, we get down to this support level, we'll be through. We'll be down below this uptrending channel marker. All right. We get through support here. Our next support is down around 9,765 thereabouts. So we've got some support there, and that corresponds with this high here, which was, we got a range that's 9,845 thereabouts. So we got a little bit of a range, maybe 100-point range there, call it 745 to 9,745 to call it 9,845. So we got about 100-point range there. We got all kinds of room for support. But we get down there, that's going to create a tremendous amount of concern, because not only will we be below the 50, but we'll be approaching the next support level. This next support level here, ladies and gentlemen, is not good, because we're at that point, we'll be coming down to, if not having gone through the 50 and the 200. So this is what I'm worried about. And is it possible? Yeah, it's possible. Probable? Not right now, but it's certainly out there. So there we go with the Nasdaq Composite. Real quick, and to see how the other benchmarks look. Okay, the Dow's come back a little bit. It was down more than 200 points, down 183 on this chart now. Actually, this is the delay here. I'm looking at live. On my other screen, it's now down 222 points. So this is a little bit behind. The dotted lines are resistance. So here we are, first line of resistance. We couldn't get anywhere near there. All right, we got up there twice and recently and couldn't get through it. Have come back down, rolled down, kind of like what the tech stocks have done. Okay, so there we are. Now we are, let's see, on today's bar. Let's take a look at where we are on today's bar. Right now, at the Dow, I'm going to give you the updated version, 26,102. Okay, 26,102. You can see, if you look to the left here, the 200-day moving average is 26,226. So we are below the 200-day. Okay, we've gotten above it. We are below that. Not good. And we are still a ways above the 50-day, but coming back down to it. 50-day on this bar is 26,076. So we're looking for that golden cross for the 50 to get above the 200. Hasn't happened. Hasn't happened. Now is the Dow going to roll over? So we got problems here. S&P is in better shape, but the Dow is the weakest of the benchmarks. Last but not least, have a quick look at the S&P. And here are our support levels here. So we've got plenty of room here. We had the golden cross back here in early July, and we've been moving up nicely. And so much better shape. We're still in this nice ascending channel. So the S&P looks good, and the Dow not so much. So we're at this kind of an odd place here where not all the benchmarks are lining up, and the S&P looks pretty decent right here, moving up in this channel. The Dow not so much. So kind of what has given me pause all week is just this somewhat of a divergence in the benchmarks in terms of their strength and their ability to move higher. And now we got the composite in great shape. For how long remains the $5 trillion question, because that's the value of those 4 companies. So far, so good. We're in good shape, but time to give a little bit, to be a little bit worried. Again, this too shall pass. And if we end up strongly today and we take off on Monday, move higher, then we're out of the woods. I'm not so sure we're going to do that. So that being said, I'm going to go check out any more questions you guys have and bid you a bon weekend. And here we are. So hopefully that answers some of your questions and also addresses why I have been apprehensive this week about the markets, in spite of trusting that the earnings numbers were going to be good, if not great. And of course they were, except for Google's, which were still good, that the market just seems tired. Peter, Eco, good second quarter, 50% up from Q2, 19 great production of 91 ounces, a 90% increase in excellent. Okay, so I'm going to take a quick look over here. Wow, yeah, the chart looks great. Eldorado Gold, everyone. And again, you expect the gold miners, you expect the gold stocks to move handsomely. And this is certainly having a nice move today, up 5%. And gold is having a bit of a bounce today. Not quite as robustly as your Eldorado. But gold is on the plus side today. Silver is having a pop today. So it was up a good bit earlier. It's now up about 2.8%. Silver was up quite a bit more than that. But we'll see. We'll see how the day goes. Nasdaq from almost a flat line is now up 0.25%. Dow is still around the 200 level, down around 200. All right, everybody. Thank you very much for tuning in. It's always my pleasure. Hope you all have a great weekend and be safe out there. Cheers.